we had lower production and higher stocks this past week. So production went down 8,000 barrels a day to 1.031 million barrels a day. The 4-week average went down 12,000 barrels to 1.046 million barrels a day. Ethanol stocks went up fairly large, up 800,000 barrels to 24.5 million. No imports so last week. Here to talk about all this, we have Scott Gecas standing by. He's with Walsh Trading at the trading floor in Chicago. And Scott, a lot of bearish tone in the ag commodities here today, and we didn't necessarily get any support from the new ethanol numbers either. What's trade talking about on the floor?
Yeah, particular, the Trump effect was in full effect, last few days with Trump tweeting left and right. The algos are definitely trading off of the tweets and headlines, pushing it a little bit lower, as you've seen. When you're looking at the corn market, it's a little bit of a supply-demand issue. Demand's a little bit weaker than expected. The ethanol numbers came out were obviously off the mark. It's particularly due to just the margins with the ethanol production. That's why you're seeing it a little bit lower, affecting some of the plants, which is definitely confirmed by the numbers that just came out. So, but most of the traders that I've been looking at and talking with, everybody's just wait and see mode, see what this August 12th number is going to come out. I'd be really shocked if you see any type of big spike in volume other than just headline risk going back and forth. So everyone's just pretty much waiting and see. Option volatility is a little bit elevated, not really too elevated. We expect that volatility to get a little bit of bump up as we get closer to that August 12th mark.
Is the market getting oversold yet?
One would say yes, but we've been breaking those support levels, on a consistent basis yesterday and today. So we have to find some type of consolidation for it to, go sideways for a little bit, have traders figure out price discovery, and then wait for that number to get that confirmation.
I did want to take a quick look at crude oil before we get into our break, do an update there as well for the energy side. And on the West Texas crude oil futures, they are firmer today. September now up 52 cents. We're at 58.57 per barrel. Meanwhile, on the heating oil trade, that's how we trade our diesel fuel. We have September now up 1.8 cents or 1.9 cents at 197.1 per gallon. So a firmer tone in the energy complex today. We'll come back and talk more with Scott Gecas about our livestock trade in just a moment. We're talking with Scott Gecas right now. He's with Walsh Trading in Chicago. And, of course, a lot of traders are kind of keeping one eye on what the Fed is going to do later on today when they make their announcement on what they're going to do with the interest rates. What's the consensus on the floor there behind you? Are they looking for a quarter-point drop or what?
Well, that's what the probabilities are based in, a 0.25% drop right now. If they do that, I don't expect a lot of fireworks just because that's what's expected. If they do 50 basis points, I think that's going to cause a little bit of volatility, a spike one way or the other. A lot of funds are going to have to move some positions around. If they raise rates, I think you're going to see a big explosion in everything. If they leave rates unchanged, I think, it's going to be a little bit of unexpected. So right now, everybody's focusing on just that quarter basis point cut. If that happens, that's expected. Don't expect much to happen in the markets. If they do anything other than that, then a big spike in volume, big spike in volatility.
Looks like the Dow at one point was about 80 points higher. We had jobs data out this morning, slightly better than expected, I guess, but now the Dow has turned 12 lower. The dollar index, I was looking a little bit ago, earlier this morning, we had the dollar index a little higher. Now it has turned just slightly lower. September down 10 points. At 97.810. On the live cattle trade, let's take a look at the futures in Chicago. We have October down 33 at 108.75, and December down $0.50 now. On the feeder cattle market, feeders really got off to a rough start this morning, over $1 lower, and now September is back there again. We're down $1.10 at 142.95, and it's way off of its earlier high from the day by about $1.10. We have the October down 88 cents now at 143. And if you look at the lean hog market so far today, you have the October down $1.30 at 72.70. Where's the bottom in this hog market anyway?
Yeah, well, with the hog market in particular, I mean, China needs to have those exports and needs to have those imports. So we're waiting to see with that. It's very odd that when they relieved some of the tariffs, we didn't see any of those imports come. So that was definitely a bearish tone. But going into the fall, we expect those exports to pick up. Imports to China should pick up. I mean, it's a matter of a need, not a want. So we expect that to keep going. The trend has been every other week with exports to China. So tomorrow we should see some exports if that trend continues. But again, it's all based on the data that comes out, and everyone's in wait and see mode.
How is it that we have the cattle futures showing so much weakness when finally we got the wholesale beef trade to kind of turn around? We've had a higher trade for a couple of days now.
Yeah, and that's really, that's odd because everybody was waiting for that higher cash value to pick up so we can get a little bit of a bump up in the futures, but that hasn't materialized. So we're waiting to see what's going to happen. The deferred contracts are a little bit stronger than the front months, and that's just due to the production dropping from fourth to the first quarter, a little bit larger than expected drop off. So we have to just wait and see how this is really going to play out.
Don't your colleagues out there on the floor think it's a little weird that feeder cattle cannot rally when you have corn tanking like it has been?
Yeah, and that's been pretty much the mood just across the board for the last few months. You know, theory is theory. These markets are reacting odd. We haven't seen these types of markets moving like this in a long time. So everybody is just waiting, seeing. Nobody I know is putting on longer term positions. Everyone's putting on positions that are lasting either 30 days, a little bit less, or even daily positions. So everybody's just very shocked by how all these markets are moving, not being as working as correlated or in theory.
Well put. All right. Well, and we totally understand. Thank you, Scott, for the report. Scott Gecas of Wall Street Trading in Chicago.